And the latest World Gold Council report is out. While for the whole of 2012, you have seen Indian demand go down by 12%. But if you look at the fourth quarter of 2012, the demand has seen nearly 4% of a run-up coming in. India, China and other central banks have driven the demand. But for 2013 as well, it really is looking like India and China continuing to be the strong contenders for demand in the physical markets there. One more thing that seems bothering is that the gold ETF investment in 2012, while it gained up nearly 51% in the previous year, the current year has seen redemptions coming in for the month of Jan and Feb. We have seen money being flown out of both of these spaces there. Well, let's get in Chirag Kabani then. Chirag, what's your sense coming in for the gold prices? Slight bit of a decline coming in, no ETF buying as well. How would you look at the prices?
See, if you look at the prices trading in a small range since the last almost 6 months, $1,610 on the COMEX downside is giving us support. Again, the same resistance, 1675, 1680 on the upside. Unless and until a clear breakout is seen, the prices will keep on continuing to trade in this range. But moreover, once the dollar index starts taking a strength above 80.40, prices can go down lower on COMEX till 1540. So the key level to watch is now on the dollar index. Once it crosses 80.40, gold prices could come under pressure and it could break the downside support of 1610 and head lower till 1540 in the short term.
Chirag, how would you look at the crude prices? Because we've seen a certain strength continue to build up in this space. Would you continue to be a buyer here?
See, crude is quite strong. Any dips coming onto the crude prices have been bought on, and it is constantly making new weekly highs. Last week also it traded and made a new high above 97.80 on the NYMEX, on MCX around till 5290 level. Till the time this strength continues, one can look to buy on dips around on MCX till the levels of 5180 with a stop loss below 5150 for again upside target till 5360.
How would you look at the base metal space now, Chirag? Because we have seen some support continue into that one as well. And there's an expectation that the Chinese participants, when they come back from their holidays, might see buying in the coming week.
See, if we look at the history, whenever China goes into a holiday season of more than 3 or 4 days, prices move higher by 4 or 5%, and when they are back, they correct down by 4 to 7%. Generally, they make a new low than the previous week low. That has been the history over the past 2 years. So again, I'm expecting the same thing to continue. I'm looking to short copper on any rise around till 445, 446 on MCX with a stop loss above 448 closing basis for downside target till 436. The other base metal which is looking weak at this point of time is lead. One can look to take short around 130, 130.50 levels with a stop loss above 131.30 closing basis for immediate downside target till 128 and 126.
All right, Chirag, thank you so much for your strategies on commodities. But remember, we were talking about the World Gold Council report as well. Let's get in then. Marcus Grubb, he's MD for investment at the World Gold Council, and he joins us live on the phone line. Marcus, hi, welcome to the show. I mean, the latest report numbers do show that while the whole of 2012 wasn't so good, the fourth quarter numbers actually do surprise on the higher side.
Yes, they did. I mean, the Q4 numbers were extremely strong, largely driven by Indian demand, which went up 41% in the fourth quarter of last year. I think some of that was driven by Diwali, of course, but also anticipation of the import tax rise that then happened in January. I think that meant some restocking and buying was done in December ahead of the tax rise. I think when you look at the full year, although it was a fall in demand of 4% in tonnage or ounces or grams, the value was up 2% to a new all-time record, $237 billion, the size of the global gold market. So not a bad year, the second highest year on record, even though we saw a small decline.
Marcus, what's your sense now coming in for 2013 when you do say that China and India are the major buyers and the kind of reforms or rather restrictions that the Indian government seems to be putting? What's your sense now going forward?
Yes, well, we think actually the market is fairly stable here. I mean, there will be some pressure as a result of investors in other countries moving into equities, for example, and there is some evidence that outside India, China, investors are becoming a bit more positive about the growth outlook. But I think many of them also realize that in Western countries, this is being generated by very, very low interest rates and quantitative easing, which is a policy that depreciates currencies, and therefore they need gold as a hedge against that to stay in their portfolios. I think looking at India and also to a lesser degree China, we expect that you're going to see a modest increase in demand again for the full year 2013, and investment demand remains stable. Obviously, the price is not rising as it has done in previous years as strongly, but we still think you're going to continue to see bar and coin and ETF demand be reasonably strong in India in 2013. I think a key factor also will be the rupee and the stability against the US dollar. Our overall target for India for this year would be an increase in demand to 965 tons for 2013, which would be a rise of about 11% on last year. So we're looking for a positive but reasonable year for gold this year. Of course, if there are more international crises in the Eurozone or the debt problem resurfaces in the United States, which it will again in March and May, then I think we could see the market strengthen further.